I want to go right to a chart that you sent over to us, and it's about within a global trade war, what the impact would be on GDP growth. Right. And I think ultimately all of this will come down to this, right. The impact on growth. And this is what we need to really focus on. Right. Tell us a little bit about this chart.
So what we do here is we evaluate the effect of tariffs. This would be tariffs on all of Chinese products, 25% tariffs on German and Japanese automobiles, and 5% tariffs on Mexico. These are ones that have been broached, and some of them have been implemented. So the tariff effect is about 25 basis points off of global growth. You can see our projection from our May Global Economic Outlook. That's the line, right. History, and then the projection. So the tariff effect alone is about 25 basis points off of global growth. But then we evaluate the consequences of the tariffs for a potential equity market correction, and we've worked with our equity analysts to evaluate that at about 10% global equity market correction. And then we also incorporate uncertainty. As we said, there's a lot of uncertainty that continues to persist. And those factors are what undermines real investment and reduces global GDP even more. So the tariffs are just the beginning of this cascade through the financial markets, accentuated and augmented by uncertainty, to erode investment, lead to rising unemployment and lower consumption. And all that put together puts us into a situation of a global growth recession, something like the global financial crisis.
Well, and I think about just tying it back to politics. Here we are getting ready for an election year, right? All of this will matter.
Well, all of this will matter in this global scenario, which of course it may not happen, but nevertheless there's some pieces of it in place. Right. And we don't know about the G20.
It's not linear. There's multiple layers
here. There are
here.
multiple layers, and for the U.S., from our base case of 2% in 2020, we would get to a 1% growth rate in 2020. So it matters not just globally, but it matters kind of at home too.
But give me a sensitivity here, base case. Let's assume we just hold still with China, not more tariffs, we don't get it all fixed. We get USMCA through, the successor to NAFTA, and we don't go to war with Europe. That's one plausible set of scenarios. What happens then?
So again, the issue is how much do equity markets and other bond markets are willing to accept sort of a partial outcome, because it's, we aren't talking about taking off tariffs at this point. We are talking about just a ceasefire. And the thing about tariffs is the threat of tariffs and the threat of other types of investment restrictions and so forth are enough to really alter the sentiment, the markets, and therefore the real economy.